Good day to everyone, wherever you're calling from. What I thought would be helpful actually for this session to kick it off is to define what is financial inclusion. So financial inclusion means that everyone, everywhere, individuals and businesses should have equitable access to affordable financial products and services that meet their needs. Now that's transactions, payments, savings, credit, and insurance, delivered in a safe and sustainable way. And in 2021, I think we can all agree that also means in a digital and very connected way. So in this session, we're going to explore with our 6 industry experts how the winning formula for driving financial inclusion requires collaboration between private and public sector players, also how it requires human-centered design, thinking, new business solutions, new technology, and a focus on digital and interoperability, as well as more sophisticated solutions from industry players such as offshore international financial centers. Simply put, there is no one solution that fits all. As we'll see from this panel session, financial inclusion actually requires many different types of players in the financial services ecosystem so that everyone across the entire socioeconomic pyramid from top to bottom has affordable, relevant, and safe financial services. Now, the topic of financial inclusion is a global one. It's actually positioned prominently as an enabler of other development goals in the 2030 UN Sustainable Development Goals, and in fact, it's targeted in 8 of the 17 SDGs. Now, the financial inclusion issue has especially been acute here in Asia. Asia has historically had some of the highest numbers of unbanked and underserved in financial services. But the good news is that the COVID-19 pandemic has actually accelerated the adoption and usage of digital financial services via mobile money, via mobile internet commerce, especially in the emerging markets. And some would say that this pandemic, we've actually hit the fast forward button. What would have taken years to advance financial inclusion has actually occurred in just the last 12 months. So what I want to do is now introduce our session panelists so that you can hear their stories on driving adoption for financial inclusion impact. So as I see them across the screen, Sam Gibbins, his title is Global TCF, Treating Customers Fairly Coordinator at Citi, a part of the Global Compliance, Fair Lending, and Financial Inclusion Division, and he sits here in Singapore. We have next Ms. Farah Jaafar, CEO of Labuan IBFC, International Banking and Financial Center in Malaysia. And then next we have Samuel Lwin. He's head of business operations at Proximity Designs, Proximity Finance, Microfinance in Myanmar. And then next we have Manu Rajan. He's CEO of Wing in Cambodia. He's responsible for payments, banking, and e-commerce. Next we have Neha Kumar. She is the financial inclusion expert, or one of them, at Intellecap, and she's based in India. And then we have Jamil Abbas, and he's the Deputy Director, Islamic Financial Inclusion at, and I hope I say this right, KNEKS, which in English is National Committee for Islamic Economy and Finance of the Republic of Indonesia. So you've had a chance to meet all of these panelists, and so I want to kick off very quickly here. So my first question is actually to Neha. Over the past few years, India has seen tremendous financial inclusion progress. So tell us about India's financial inclusion agenda, how they've done it so successfully with the Aadhaar ID system and UPI, the interoperable real-time payment system. So over to you, Neha.
Thank you so much for having me on today's panel. Good morning, everyone. Now, India has really catapulted on the financial inclusion stage in the recent years, and that's a very optimistic sign for the rest of the developing world. Last year in 2020, India had the highest number of real-time online transactions at 25.5 billion, which was ahead of the United States and China. Now, why we are seeing similar statistics coming out of India in the recent years is primarily because there has been a convergence of a lot of DFS enablers in the past couple of years. To begin with, the government of India has a huge focus on financial inclusion. There was a national policy on financial inclusion that was launched early in 2020. Since 2014, there's been a lot of focus on universal banking access for all individuals in the country. And the past couple of years have seen the private and the public sector really come together to ideate on solutions that work well for the Indian diaspora. And the UPI is really a product of a lot of ideation that has happened over the years. This is a product of the future. This is something that can be equally used in a developing country as well as it is being used in India and also in a developed country, because it is a product truly of the future. What makes UPI so good, which a lot of people have not been able to crack the code at, is really the interoperability and the charge-free transactions. You can be on any account, any wallet, irrespective of the institution you're on, and you can still transact through UPI, and you don't need to pay a charge for that. Even when it comes to merchant payments, the QR codes are interoperable. So that makes merchant payments very easy to do. And that is one of the reasons for why it has scaled so much. And this will be one of the reasons why it is going to be sustainable over a long period of time. Now, from an access point of view, about 60% of the urban population in India has access to smartphones. So that takes care of a chunk of population who can do these transactions by themselves. But the people who don't have a smartphone, or when we move into the interiors of the country, into the rural areas, one of the other products that really works well is the Aadhaar-enabled payment system. And yes, it's got its challenges when it comes to transaction failures, the connectivity issues, etc. However, what I have seen personally on ground while doing implementation work of digital ecosystems across villages in India is that this model is amazing because it's a phygital model. You get the assistance of someone helping you do these transactions, but you have the entire control of these transactions literally in your hands because it is based on your thumbprint through the biometric device. And to conclude my point, one of the things that India's done really well is the behavior change aspect of this entire intervention. There are a lot of awareness programs that has happened, and of course there's literature available for anyone to read about it. But from my own field experience, something that works really well is the availability of influencers or social change agents within the communities where we're trying to drive these interventions. When someone from the community tells you how to do a digital transaction, that has a very different impact than others from outside. And this also helps build the very foundation of trust towards something that you can't see, a digital transaction. So for any intervention to succeed, trust would really be the single most important factor as we go forward.
Okay, thank you so much, Neha. India just has a really incredible story to tell, and thank you for highlighting the many ways it's been so successful. So next, I'm going to move over to Manu. And Wing, if you're not aware, in Cambodia is the country's leading mobile money and electronic payment service, but it was also very intriguingly called Cambodia's first failed fintech. So please tell us a little bit about the history of Wing, and also you pretty much have 100% adoption rate. How did you do that?
Thank you, Juanita, for that question, and thanks for having me here. And good morning, ladies and gentlemen. Wing Cambodia was started in 2009 to actually emulate the success mobile financial services companies were enjoying in other developing countries, and especially in East Africa. So that time, Cambodia did have a lot of banks, but the financial inclusion was in single digits. So we had 9% of the people with a formal bank account. So Wing also started out by approaching the unbanked segment, just like any other bank would do. And obviously we failed. So in 3 years' time, the company was planning to shut down operations because it failed to move the needle. So that's when the current chairman of Wing, Htike, who believed in the purpose of driving financial inclusion in Cambodia for his people, he bought the company and he decided to run it truly like a mobile financial services company. And this was in 2012. Customers could then visit a Wing agent with their cash and identify themselves using their mobile number. And the agent then carried out a digital transaction on the customer's behalf using Wing backend and the mobile number as the unique identifier. And since then, Wing has led many firsts in Cambodian financial services market. We launched the first closed loop plastic card. That was a big thing in those days. First fintech mobile app, the first MasterCard for the unbanked, which the micro SMEs use to buy raw materials for their businesses from abroad. And they also use that to advertise their business on digital platforms and social media. We are also the first fintech to cover all countries when it comes to remittance business, and through which now the migrant workers are sending money back to their families at rates 5 to 8 times cheaper. We also have launched the first closed loop rewards program for about 55,000 merchant points that we have. We have a food delivery business that was started to help the struggling restaurants during the COVID pandemic. We have an e-commerce business. We are the first failed fintech, and we are also the first fintech to upgrade itself to a commercial bank in Cambodia. So every segment of the society, interestingly, has identified its own niche use case with Wing. Large corporates to small SMEs and micro SMEs, they all use Wing for expanding their businesses digitally across the country. Today, Wing has diverse interests, as I mentioned, and all of them are deeply rooted in one mission, and that is to use financial services to improve the lives of every Cambodian. 80% of our agents who are at the core, at the heart of everything that we do, are interestingly women who are mostly stay-at-home mothers, and making it one of the shining examples of gender inclusion in Cambodia. So from a very failed fintech, Wing is now being used by almost everybody in Cambodia. The transaction volumes on the network was more than 100% of the country's GDP value in 2020. I'm not sure how many people would have heard of the Wing story before. So therefore, thank you so much for this opportunity to share that Wing story to everybody. Thanks, Juanita, and over to you. Yeah.
Thank you so much, Manu. It really is an incredible story. So now we're going to go over to Samuel, and Samuel is in Myanmar with Proximity. Now, Proximity is an agro-fintech program that engages about 200,000 crop and livestock farmers across Myanmar. Proximity, if you can tell us a little bit about what you do and the importance of customer design thinking, as well as your focus on digital for scalability and efficiency that has really driven your business model to make it a success.
Thank you, Juanita, and thank you very much, everyone. I'm glad to be here, and good morning, ladies and gentlemen. So Proximity Design is a social enterprise based out of Myanmar, and we have been in the market for about 17 years, providing the largest agri-service platform, focusing on affordable farm technology, advisory services, and financing solutions. So we aim for smallholder farmers' profitability. So 3 facts about Myanmar right now. A third of the GDP actually comes from agriculture. And then 61% of the employment is actually coming from agriculture sector as well. But farm profit is actually the lowest in the Asian countries. So with the right kind of product and with the right kind of fit, we can actually make sure the farmers can actually maximize their profitability. That's when we believe that farmers actually deserve a well-designed product. So we have actually undertaken a participatory kind of approach towards lending or financing, where they have a say on when clients have a say on the features, the customization, the payment patterns, and also all the other aspects of the product. So we have actually created this customer stickiness to over time, but at the same time with covering geographical area, crop, climate patterns, and all the other potential factors, we have maintained a relatively healthy and also well-diversified portfolio for us. But having said that, just customization alone doesn't just suffice. So we have to make sure we have to be efficient in the back end as well. So that's where data and all these digital initiatives come in on board. And in that sense, we have to tap into other areas like digital field app for more information gathering, credit assessment being standardized so that we can make it fast and easy for our farmers. So from the time of applications to the disbursement, we have to make sure we deliver it within 2 weeks. So that's a lot of effort in terms of digital and data. But I will conclude it by saying a lot of the people would think that farmers or agriculture sector is the most risky, but through COVID, we have actually proven that they are the most resilient.
Okay, thank you for these comments. Smallholder farmers play such an important role, not just in Myanmar, but across the Asia region. So we're going to next go to Jamil, who is in Indonesia. Now, the mission of KNEKS, which is chaired by the President of Indonesia, is to advance the Islamic economy and finance to strengthen national economic resilience. So tell us more about the aim to drive Islamic financial inclusion within KNEKS. Jamil, over to you.
Yes, thanks, Juanita. Yeah, so in Indonesia, we have a special president regulation about financial inclusion. The main point about that regulation is financial inclusion must be about helping the people to improve their prosperity. So the first thing we must do is to ensure that the financial service goes to the people are the good ones. And this is something very, very serious until now. Because, for example, because of digital technology, now we have a lot of good fintech. But at the same time, now we have lots of digital or online loan sharks. So many people get trapped because of it. So that's the first thing that KNEKS, as part of the government, is trying to do to ensure that the financial services goes to the people are the good ones with positive impact, and keep reminding the people to be careful on the bad ones, which is now really coming every day. Thousands names coming now because of the technology, and although the government has tried, the law has tried to kill them, but now we catch some of them, but tomorrow another 1,000 coming in. And second thing is about good financial services in Indonesia being a large country, Muslim dominated. It's not just about good from the point of view of economists, but also good, which is in line with the religion of the people. As you know, in Indonesia, religion is playing important role. So that's why we also have to establish Islamic financial services as well. So in general, what KNEKS is doing is trying to develop the system, and financial inclusion is about having financial institution and the people to get connected with each other. So that's what we are doing. So we need to do something on both sides. So we need to, on the financial services, we need to keep encouraging them to also serve the whole country, because many times good financial services, they just like to do business in Jakarta and other big cities, but Indonesia is more than just Jakarta. So we need to do something on that, and also we need to do something with the people. We need to educate them, encourage them to go to the right financial services. So that's basically what we are doing.
Okay, thank you so much, Jamil. We're going to come back and ask you some questions in a little bit about the programs that you're running in Indonesia, and yes, a very large country to cover. So my next question is to Sam at Citibank, and I must confess I was really intrigued with your title when we first met, which is about treating customers fairly. Now I understand that Citibank has independently taken the global initiative to ensure customer fairness across all Citi products. So tell us more about that.
Yeah, thanks, Juanita. Sort of an interesting area in terms of the work we do, because we cover a lot of different geographies, and I focus on the consumer bank, which is broken into sort of North America, Mexico, and then Asia Pacific and EMEA is one big area with 17 different countries. Of course, that means we have lots of different laws and regulations. Every country thinks their laws and regulations are the most important, of course, and we have to abide by those wherever we operate. But we also have global principles that we've come to think are just the right way of doing business. And some of these are based in law, but from other places. So our treating customers fairly framework fits within what we call consumer fairness, which used to be known as fair lending. Of course, fair lending, the idea of giving credit products to people, but we now include deposit products, and we include a whole product suite across the consumer side. And those provisions in places like the US are very old. You know, the original protocol that came in from the FTC Act of 1914, you know, indicating that we should treat people the right way. And this now is what is referred to as UDAP, so unfair, deceptive, and abusive acts and practices. So we work to make sure in all of our consumer markets, we treat customers fairly by not dealing with them in an unfair manner, not deceiving them, and not being likely to deceive, and not abusing what tends to be a consumer's lack of knowledge in a given area. Now that means we're doing things that regulators don't necessarily tell us to do. Legally, we don't have to do, but we consider the right thing to do. As an example, at the moment, we're looking at a terms and conditions document in one of our Asian countries in Southeast Asia for credit card products. And the terms and conditions, it's very thorough, it's very accurate, it's legally drafted, it conforms to the regulation, but it's also 109 pages long. Now, if you're a normal, and I can see Farah sort of giggling, I was the same. How many normal customers in Southeast Asia would read a document of 109 pages and understand all of what it says and absorb all of it? And the answer is really not very many. So legally it's fine, but from a fairness perspective, it's really not a great idea. So that's an example of us as working to say, you know, what we're doing is okay legally in this country, but it's not good enough as our policy says it should be. And we will then work to remediate that and make it fit for purpose. The other side of, and our sort of TCF framework, we started rolling out globally in 2015. So, you know, still fairly recent. It's becoming more well known across Asia Pacific, but there's still work to do. The second piece of it is our financial access side, which is really what other people refer to as financial inclusion. And the two big things for us are making sure we are non-exclusionary as it relates to products and services and non-discriminatory. So making sure we don't discriminate against people on the basis of age or gender, disability, etc. Now that is a sort of a secondary piece that is very complex because of the way that banking traditionally works. When we look at what we do from a fairness perspective, we've got broad principles. You know, do the products and services we offer work as described? And we've all seen examples of where this does happen and where it doesn't happen. Are they appropriate for consumers? You know, are we selling based on what consumers actually need, not just pushing them to buy things? Do we offer value for those consumers? So, you know, is it appropriate to the level of cost they're paying? And do we provide ease of understanding? And this is one of our really big issues at the moment is, what are we doing and what can we do better as an institution to help customers understand how finance actually works? Because a lot of the time, even for baseline cash and savings accounts, people aren't necessarily aware of what this really means and how the system works together and what benefits they can get out of those products.
Thanks so much, Sam. This is such an important area. We need consumer protection to protect clients around financial services, but great to see Citi taking these extra steps. And I think you had a smile on everyone's face when you asked about have you read the T&Cs and how long some of these terms and conditions are. So let's now go to Farah. And as I mentioned in the beginning, Farah, financial inclusion can only be achieved through collaboration and various private-public sector players. So tell us, as CEO of Labuan IBFC, how you see the role of offshore financial centers in the development of inclusive finance.
Thanks. It's really interesting to hear everyone else speak about their experience, their professional experience, but what we need to understand is financial services works as a global network. Within jurisdictions, all fair and good, but you know, once you want to access an international network, what you're going to need is access to plumbing. And if you look at international financial centers as global plumbing, it seems completely sensible that as financial centers adopt, you know, jurisdictionally bound financial centers adopt digital finance and digital approach and the issue of equality, they're going to need a clearinghouse or plumbing system that mirrors that same ethos. So really, it's as simple as that. You know, at the moment, the discussion about financial inclusion sits at a very jurisdictional level. The point is, in order for us to move to the next level, to ensure true inclusion, we need to ensure that the wholesale financial intermediation also remains with that ethos of inclusivity. And that's where the role of financial centers is important. The other thing I'd like to point out, which actually, when you start thinking about it, seems very logical, is that international financial centers really, and I use this word very loosely, we respect no boundaries, right? Being a wholesale financial center, we respect, again, very loosely, no boundaries. And guess what? The the space of digital also respects no boundaries. And it segues nicely into that whole concept of this event. It's called seamless. Why is it called seamless? Because the jurisdictions and borders melt when it comes to digital. And my personal aim, and this is something that I'm very passionate about, is about inclusive, bringing everyone to the fore. Because as you said, Juanita, earlier, Asia is home to crazy rich Asians, but let's not forget that the disparity is only next to Africa. And Africa's gone leaps and bounds with the start of M-Pesa all those years ago with regards to inclusion, but Asia hasn't. And whatever role Labuan can play in facilitating this, and I'd like to speak a little bit more about that later on, we really, really welcome. So thanks for this opportunity, and it's very nice to meet everyone here.
Okay, thank you so much, Farah. It's really interesting to see your view on how the integration with international financial centers. Interesting you call yourself global plumbing as well. But we're going to come back and ask you some more questions in a little bit. So I'm going to come back to Neha for the next question. Now, Neha, when we look at financial inclusion data, women still lag on the access and usage of financial services compared to men. Through your work, what do you see as the main obstacles for women, and what interventions can drive greater access and adoption of financial services by women? Over to you, Neha.
That's a very important question. Now, the reason why women are still lagging behind is firstly because there's a lack of agency. Either they don't have bank accounts, or if they have bank accounts, the usage of that bank account is questionable. If there's one smartphone or one basic phone in a family, I don't think a woman would be the first owner of that. It's probably going to be the men. When it comes to accessing credit, most likely women are not going to have collaterals in their name. And if it's a joint collateral and a woman wants to use that for her own business, very slim chances that she'll be allowed to do that. So there is no agency. Second, the supply side really looks at women as a monolithic block. All women are clubbed together into a homogeneous block, and they're not able to sub-segment the various opportunities that exist when you look at women in smaller sub-segments. Now, within MSCs also, there are collectives, there are very small enterprises, there are a lot of sub-segmentation opportunity available, and products can be catered and customized for those segments. Which unfortunately doesn't happen, and which is why globally the women portfolios tend to be smaller when it comes to when you compare them with men. Thirdly, and even in 2021, it's unfortunate, but we still face a lot of patriarchal issues where women are supposed to be the primary caregivers. Even from policy standpoints, women are in a lot of places, you need a male guarantor when a woman needs to access loan. So it's unfortunate, but that is something which I feel globally binds all of us together because it's a problem of every country. Now, what can we really do about this? To begin with, I think there has to be a stronger policy and regulatory push here. We do have priority sector lending in a lot of countries. We have 25% priority sector lending in India, but it doesn't have a gender lens to it. So when you mandate that by law to at least have a certain portfolio for women, it's going to make financial institutions innovate, and they will figure out a way to make it profitable for them. That is what product innovation is. Secondly, I think another very important thing is really having gender sensitization in the way our processes are built. Now, there isn't a bank out there who is not giving loan to a person because she's a woman. But how do you ensure that at the very first step, when you're sourcing a lead, and there isn't a subconscious bias why the person who's looking at that lead is rejecting it because she's a woman? How do you ensure those subconscious biases and those outdated perceptions don't crawl into the processes you have? So there's a need for a huge gender sensitization and process re-engineering in the way supply side works across the world. And thirdly, and this is really important, is the collaboration of ecosystems coming together to advance financial services for women. When you bucket non-financial services, which are often provided by a lot of intermediaries, non-profits on ground who work with women groups, who work with women entrepreneurs, and you club it with the financial services that any financial institute or a fintech is providing, you are able to create an ecosystem that is mutually beneficial. These financial institutions are actually will be able to get leads which are good for their business, which will get them the returns that they need. At the same time, women will be able to access finance better. And that's really important, the entire ecosystem coming together, because the goal here is not just to open an account or a wallet account. The goal here is to have inclusion so that it improves the financial resilience and the quality of life and the financial decision-making of the people who are financially included.
Okay, thank you so much for those comments, Neha. Having a gender lens on financial service products is so important, and I mentioned before when talking to Samuel, this human-centered design thinking from the very start. And women have proven through microfinance to be very good users and reliable users of financial services. So in fact, we're going to go back to Samuel. Partnerships, Samuel, how have proximities, partnerships with other organizations played a role in your success to deliver training and technical support to the farmers in Myanmar?
Sure, thanks for that. So usually when we are talking about Myanmar, it's always a red alert. And then what's worse is actually when you're focusing on agriculture sector, oh, it's even more riskier. So I believe the partnership over here is that how they can actually help us de-risk some of these high-risk sectors. And in that sense, it's not really just about going through the list and so on, but how they want to grow with us, taking that co-leadership approach where they can have a say or have a role in how the system change or how we can build up the community and build up the organization itself. So in that sense, we have had very great partnerships over time, especially on, blended financing options where we have been able to hedge ourselves with a local currency, or even with the digital capacity development, how we can actually boost our backend and how we can move on to mobile money, and also with the some of the prominent kind of institution. We have also done research in all these sesame ecosystem value chain kind of research, or if not, all the other aspects that come with climate change, soil tests, etc. So in that sense, all these factors packaging together can actually benefit farmers, not just from the financing perspective, but also how we can add additional income for them. So I would say this, if you want to go fast, you can go alone, but if you want to go far, you have to go together. And I believe that all of us over here working for financial inclusions are for the far and for the sustainable future. So I can see some partnership in there as well.
Oh, thank you so much, Samuel, especially for that closing statement that you made. Now I'm going to come back to Jamil. Tell us a little bit more, Jamil, about how KNEKS connects financial institutions with the community to promote Islamic financial services in Indonesia.
Yeah, currently the main challenge is we do not have enough branches to serve the people. Right now we have about 3,000 Islamic bank branches in Indonesia, but it is totally not enough. Maybe we need 10 times bigger than that. So what we do is, so many people outside the big cities, mostly they feel that Islamic financial service is very far from them, very far, not affordable. So what we do now, we try to encourage the communities, especially community organizations, to upgrade themselves from being just observer or being just a customer to be an active players in expanding the financial services network. So we develop a model. In English, we call it a community-based Islamic financial services unit. So where community organization like schools, masjids or even any youth organization, they can develop that unit. So in that unit, they do not need to be an Islamic financial institution because it is not easy to establish a financial institution. But what they do is they become the agent for various Islamic financial institutions in countries. So of course, we are talking about the good ones again. So we need to be very careful on that. We don't want the bad ones to come to our people. So in that unit, because it is based on collaboration, then it is becoming very easy and cheap for the community to have their financial services unit. So all they need to do with our support is making a collaboration with the Islamic financial service that they choose, which they believe it is the best for the people, and that's it. So in that unit, the people now, they don't need to travel all the way just to go to the nearest bank branches, because product from the Islamic bank or product from Islamic insurance or a pawn shop or even Islamic fintech, they can get it from the nearest schools or the nearest masjid or the nearest community offices. That's basically it. And so far, so good, because, you know, if we establishing an official bank branch, it's not easy and it's not cheap at all. I mean, it's very expensive. But being an agent is quite easy. And the most important thing is the people can get product with the same quality, like the one that that is available in the big cities.
Okay, thank you so much, Jamil. It's really a great example of how collaboration, again, partnership.
The keyword is collaboration between communities and the banks. I mean, Islamic financial institution, not just the banks.
Yes, yes, and you have quite a number of people in Indonesia to serve and a great number of islands to reach in that. So all the best to you on this. So let me now come over to Sam again. Now at Citi, your focus on financial access for all includes customers that may be actually hearing or seeing impaired. So tell us a little more about that, but also you and I had a quick discussion about how some of these new tools like AI can in some cases or maybe not be a great asset for what you're looking to do. So over to you, Sam.
Yeah, we have a whole range of what we describe as prohibited factors, which are bases we won't use to ascertain our dealings with customers. So there are sort of the easy things. You know, gender is quite an obvious one, and Neha mentioned this earlier. It's becoming easier over time to sort of wean out these prohibited factors in many cases and deal with people evenly, whether they are male or female or other. And we also have prohibited factors on gender identity and gender expression, which, as you can imagine, in some of our Asian countries, these are not particularly common things to be openly discussed, but are likely to become increasingly important in the coming years for customers. When we look at things like disability, I mean, disability is an enormously sort of wide area. And we have countries in our region that have very specific laws on not discriminating against people with disability. For example, Hong Kong, Australia, the Philippines. And then we have some countries that have really sort of nothing in this area. Now, that's not to say that you should then discriminate, but the questions are, what do we do for people that might be disabled? What do we categorize as disabled? And we would say that somebody that's visually impaired is disabled, somebody that's hearing impaired is disabled, which then leads to another question is, you know, what are we doing then as an institution to allow somebody that's visually impaired to interact with us? To allow somebody that's hearing impaired to interact, because the normal digital channels we look at, you know, it's either on your online or your mobile phone, or you call us. Well, if you're visually impaired and you can't see the screen, that doesn't help very much. If you're hearing impaired and you can't call in, that doesn't help very much. So we're working across our countries, and this is a bit of a sort of a staged rollout, to move to current versions of accessibility standards for customers, to be able to interact with us if they're visually impaired and if they're hearing impaired and if they're broadly disabled in other categories. This also extends to then the way, again, we model. So how do we provide products and services to these people? You know, removing the fact that somebody might be disabled from the way we determine the service of products and services. There are, of course, some exceptions. You know, we couldn't offer, you know, health insurance products to a disabled person. You know, so for example, to insure somebody full body for health, knowing, for example, that they don't have legs. You know, so there are issues here again as well that might go against their own policy, and we have to make exceptions to. But we're trying to look at it not just from the perspective of age and gender and address and where people are, but also the different factors that can be challenging for people. There's also this sort of conversation at the moment around technology. You know, so how do we, of course, digital is becoming, or has become incredibly important, and that's been accelerated in the last couple of years. How do we make and use and build systems that allow us to do this better without building in the bias? You know, the problem with some of these things is we can have the best intention, but the system can be built with bias from day one. We've got jurisdictions now in Asia that have sort of missed out almost a step of their financial inclusion story. So they've gone straight to creating principles for how we deal with people using artificial intelligence and data analytics. Singapore's a great example. You know, we've got principles for fairness, ethics, accountability, and transparency in AI and data analytics. We don't have those equivalent principles for human-to-human interaction. So we have to build systems, AI systems, that don't treat people unfairly. But somebody could walk into a Citi branch and we could look and say, well, that's a lady, to Neha's point. She probably doesn't make the money, don't give her a credit card. So face to face, we can discriminate, but systems-wise, you can't. And you know, have we missed out this middle ground of regulation where we're now relying on, hopefully it works better with technology, but actually on the ground interactions don't necessarily apply? What happens if someone contacts us and they call up over the phone for a product and the customer service agent hears that the person is, you know, of a different race, or they say they're of a certain religion, or they're based in a certain location, and our customer service agent thinks, well, that location is where not so well off people live, I'm not going to give them information on better products. You know, so you end up with this sort of two-tier where we're having to create internal policy to level out the fact that sometimes the regulatory environment is very, very diverse. And that's not to say that regulators are not doing it, or not trying, or they're missing things, but it's in such a fast-moving, challenging area. To try and keep up to speed with that for regulators and for industry alike has become very difficult, whilst we try and make the policies fit for our customers.
Thanks so much for those comments, Sam. This is such an important area to make sure that financial products are inclusive, that they're fair, and interesting. It's a really hot topic about this bias and these digital tools like AI. So thank you for those comments. Now, Manu, back to you again. Wing Bank, it received its commercial bank license in December last year. Congratulations. And so with all the success you've already had, what are your plans now in expanding Wing's products and services?
Thank you, Juanita. In my opinion, Cambodia doesn't need another traditional brick and mortar, high overheads driven bank, you know, targeting the affluent segments, since there are many successful commercial banks that are already addressing these segments. Financial institutions usually want former relationships with unbanked customers. We try to forge those relationships, but most often we do not ask the question whether the unbanked want a former relationship with a financial institution. So therefore, I guess what is required in Cambodia is a financial institution that can think unconventionally and selflessly to create one, financial literacy, then trust, income generation, and therefore engagement with the unwilling customers from the bottom of the income pyramid, so that they come forward and create formal relationships with the financial institution. So Wing aspires to be that partner who will work with the unbanked and the underbanked in creating livelihood and income for them, with an objective to, of course, improve their lives. So that becomes the purpose then. The banking license to us then will only be a means to that end, a process that will help us achieve that purpose and not the other way. So to give some examples, Cambodia has close to 1 million women working in garment and footwear factories. They get paid on an average a little above the minimum wages and end up saving very little. They have no formal bank accounts and neither have easy access to loans, especially in times of emergency. So Wing provides unsecured loans to these factory workers with no conditions, so that they don't fall victims to loan sharks in times of emergencies. How do we do that? Because we manage about 20% of the payroll accounts of all factory workers in Cambodia. And more than half of Cambodia's SMEs are women. The biggest challenge that they face is that easy access to finance. So Wing has partnered with USAID and BAC to offer 100% unsecured loans. No questions asked, frictionless loans to these deserving women entrepreneurs. Now, similarly, we intend to work with every segment in the society that otherwise are ignored or neglected because they're not so profitable due to the high costs of serving them by traditional banks. So Wing intends to make use of our agent network, which is spread across every single district and almost every street in Cambodia, to bring down the cost of operations and then pass on those benefits to the customer so that we can serve every Cambodian in a very cost-effective and therefore sustainable, which is very important way. So that's one of the reasons why the positioning of the bank is the bank for every Cambodian. So there is absolutely no discrimination. There is absolute and complete focus on inclusion. Will we succeed? We don't know. But then how will you find out without trying? Thank you, Andy.
Thank you so much, Manu. And interesting to hear how you don't see yourself as being a traditional bank, but really reaching out to everyone, being inclusive. I wasn't aware that 50% of the women, 50% of the SMEs are run by women. Great to see your gender lens and really looking to build a sustainable financial services solution for all in Cambodia. So thank you. And now over to Farah again. And I was really excited to see Labuan IBFC, I have to say, in this session. Being that you are a jurisdictional agnostic and with a proportional regulatory environment, tell us more about how you can play a role as financial services do advance across the region. And there was a project that you mentioned to me when we spoke, if you would like to comment on that as well.
Oh, yeah. Yeah, these projects always kind of make my day. So that's why I tend to mention them a lot. So let me go back a bit before we talk about the project to talk about really how we you know, as an extension of the earlier statement that I made about how we see ourselves. I mean, obviously, as a jurisdiction that's proportionate in regulation and embrace the digitalization, the financial digitalization. And I'm not talking about fintech necessarily, because I think there's always a lot of confusion between what is fintech and what is digitalization of the financial services and the processes within financial services. I think it's important to remember that, you know, the real benefit humankind is going to achieve from digitalization is not necessarily via the collapsing of digital processes, legacy processes in a digital environment. So you're looking at a situation where, you know, a jurisdiction has to accept DeFi. Of course, as a jurisdiction, it's you know, we sometimes are quite taken aback and quite afraid of technology, because obviously as legacy practitioners, the ethos again is very different, and we're keen to understand, but we understand that we're never ever going to be ahead of the technology, right? So there's a balance that needs to, you know, like everything else in life, it's about balance. But what's important to remember also as wholesale financial centers, we're able to offer very bespoke structures. So this is something that we talked about, Juanita, when we talked about the protected cell company. So the protected cell company is really a company that can be used for fund management or insurance. It's very much similar to the Singapore variable company. However, we allow it to be also used for insurance. And in case in point, there is an initiative out of Japan to create a social safety net for all the paddy farmers in Indonesia via a protected cell company that is then licensed in Labuan. So because we're jurisdictionally agnostic, it doesn't matter where the end client sits, right? What's important is that the structure is available, and we are also able to facilitate the digitalization of that structure and the processes of that structure. So in this particular instance, what we're trying to do with this partner who's getting funding from the Japanese government and also the UN UNDP, I believe, one of the UN entities anyway. Sorry if I made a mistake there. What they're trying to do is actually create a situation where there is an immediate insurance payout the moment flooding occurs in a particular province within Indonesia. And the reason it works, and that's why Indonesia is so beautiful, is that the concept of association and cooperatives within Indonesia is so strong. And this is the only way inclusion can be moved forward, because there's information. And we go back to Sam's issue of AI. You know, AI is so important in trying to collapse the system to create the cost efficiency that then facilitates real inclusion. Because if not, let's be honest, inclusion is lip service. Real inclusion can only happen when there is a cost efficiency. And this is, and there's jurisdictional agnosticity. So this is how I feel that centers like ours can play a part. And it's important that we take that leadership role in order to speak about this. So people understand that, you know, in the global plumbing system, you know, for as long as the plumbing remains within your house, that's all and well and good. But until it enters the real global plumbing system, or the bigger ditch, as it were, you're going to get caught. You're going to get caught by the fact that, you know, it doesn't jive. So that's important, you know. I mean, and it's not the first time Labuan's played a role in something like this. I mean, you know, years ago, we are home to the Asian Infrastructure Fund that is actually hosted by the Asian Development Bank. And this infrastructure fund is funded by all the finance ministers within ASEAN, homed in Labuan, domiciled in Labuan. And the first project was actually to link 2 villages in Myanmar via a bridge. You know, and if things like that don't then push forward inclusion and equality, nothing will. So, you know, although we're very much like the Intel inside of a computer, you don't really see it, but it's there. So yeah, so those are examples of what we've done. And we really look forward to playing an even bigger role because we feel the need in Asia, and we are very Asian focused. So yeah, thanks.
Yeah, these have been great stories, Farah. I remember asking you how have things been during the pandemic for you? And I think you've been very busy. So maybe you want to just make a comment.
Yeah, so Labuan actually is home to almost 900 licensed entities. And what happened is that we set up a cross-industry COVID fund that, you know, garnered up to almost R1 million to help within the community in Labuan itself. And so we're very proud of our partners, our financial intermediaries, you know, and a lot of them were digital players. I mean, Labuan's home to 60 odd license holders. We have almost 50 odd crypto exchanges, payment gateways. We're home to 3 digital primary and secondary market exchanges. And yeah, so the digital community within Labuan is alive and kicking, I promise you. It's growing. But yeah, we wanted to intervene during the COVID. I mean, a lot of us are not based in Labuan. I myself, I'm based in Kuala Lumpur. We're not based in Labuan, but that doesn't mean our hearts are not there. And so we really wanted to play a part in assisting people on the ground. So we've been very lucky with the support that we've had, and we continue to receive that support. But yeah, again, the digital family and how open the digital family has been so amazingly refreshing for a legacy finance person like me, anyway.
Okay, this is all fantastic to hear. Now, we're getting very close to the end of the hour, and we actually have time for this last bonus question. So I'm going to ask each of you in one word or one sentence, tell us what you see as the one key driver or intervention that will have the highest impact to globally drive financial inclusion adoption rates. Okay, so Sam, I'm going to start with you. Sam at Citi, there's 2 Sams.
I think for me, it's been mentioned a couple of times, collaboration. And it's not just collaboration between incumbent bricks and mortar banks and new players like Lwin, for example, the fintechs. It's across the regulatory environment, it's across the government and think tanks, you know, so what KNEKS are doing, what Neha is doing. It's across the whole of the global plumbing network, but also outside of that, things like telcos.
Okay, One word, one sentence. Okay. Collaboration. Okay, Manu.
It has to be financial literacy and not mixing one's digital inclusion agenda with financial inclusion agenda. We learned the hard way in Cambodia.
Okay, thank you. Jamil, over to you.
Yes, financial inclusion should be about helping others. So it is, you can do it as a business, you are allowed to make profit, but at the end of the day, you must be able to explain to all stakeholders about the benefits you are offering to the people, on how what you are offering is improving the prosperity of the people.
Okay, thank you, Jamil. And then Neha.
Confluence to build ecosystems.
I'm sorry, I didn't hear the first word. The
confluence to build ecosystems.
Okay, excellent, excellent. Then Samuel.
Togetherness for more inclusion.
Okay, okay, and Farah.
Give everyone a device.
Brilliant idea. If we all just had that smartphone. Okay,
Yeah.
but thank you all for being with us today, sharing all your stories